She can't get away from home. But since she bitches about it in the studio, she sits down. Future of the service and I didn't use. Well, it's on the spirit, but the wizard is playing. Making fun with this new, it's time I go for long. She's also spending some time on the guy. You were sitting, supposed to love you. Go dancing and down. It's 60, it's time to stay with you. I will see what I do. But then run away. My girlfriend's the boss. My job is to do together to say. But it's just the start of the well. Is there over the end? Meanwhile, the city is for the start brand. It's not, it's a problem, it's not. It's just saying, clear life so easy today. The rivers been told, the dagger is it was something that he should have done such a long time ago. Still time to start it with life. The pleasure was worth all the pain. Well, you see, I wish you were beautiful. To bring a life so easy today. The people, the death is due to the rebel.
Good morning, everybody. Happy Friday. All right, we'll get started here in about 5 minutes. Let's take another look around. Not gonna try to catch this falling knife yet. I'm gonna look for a good solid entry, so time to be patient.
Rainbow. Order bill.
Yeah, looks like we might have some good activity here about a half hour before the market opens, so let's get our prepping done here.
Big and strong.
Good morning, candlestick shenanigans. Glad to have you here. Morning, Kenneth.
Don't worry.
Good morning, everybody.
Easy living down in make it a strong one. We're gonna have some fun tonight. Make it a double up. We're gonna cast away tonight. And then I'm stayed up.
Morning, Miss Fay.
I'm never gonna leave. Gotta stay and watch the waves. The sand beneath my feet. Banging on the radio. Laying low and feeling. Easy living down in down. Oh, it's metal. Make it a strong one. We're gonna have some fun tonight. Get a double. We're gonna cast away tonight. Like we gone. It's time flies by, so we
All right, let's get this ball rolling here. Good morning, everybody. Shut down a couple of other things here. All right, so we had some PPI numbers come out. Kind of shook up the market a little bit. It was about a half hour ago. We do have a couple of delayed economic reports still coming out. Construction spending, 955, and then the newest numbers here. Now you can imagine once they do reopen the government, all of these numbers, pretty much for this whole year, are going to be really messed up. So we'll see how well the Bureau of Labor and Statistics can catch up and get things rolling here. Okay. Now, during most of these numbers here are based on surveys, not somebody calculating the numbers. Okay. Because the surveys require the numbers come in and they put things together. So, really interesting to see how the economic reports are built, and we might be looking at some new construction of the BLS, which is the Bureau of Labor and Statistics. Okay, there's a new leadership in there, and things could get much better, more clear. Okay, and not so politicized. But anyways, check the news. One of our things we're doing we're doing a pre-market routine course. We're starting day 2, which will be this evening. We'll finish it up. One of the things we do is check the news and how the news makes us feel. Okay. 9 out of 10 bets fund manager made over the last year have outperformed. These are his next two plays. Now, again, that doesn't help you make a trade. It just says, how does it make you feel? Does it make you feel more bullish or more bearish? Dow and S&P and Nasdaq point to lower start as volatile February comes to a close, while Treasury yields keep slipping. And boy, that is a big thing right now. One of our odds enhancers that we have and look at in the pre-market is comparing the US dollar to the 10 and the 2-year yields. Now, they should be correlated for some more favorable trading environment. Okay. Now, notice there's just a big thing where the 10-year yield is dropped below 4%. Okay. That's a kind of a milestone there. We don't want to see that. Okay. Now, this is also has some bearish implications on the markets. There's a lot of statistics that are out there right now showing that money lending, all-time highs, default rates, all-time highs. This is not just the US, okay, but this is worldwide. So some major changes are getting underway. The NASDAQ pre-market indicator we can see has gapped down significantly. The NASDAQ pre-market indicator has a 92% correlation as to trader sentiment at the open. Now, trader sentiment at the open can also be influenced and confirmed by the volatility index. And if we take a quick look at the volatility index, the VIX, we can see the VIX is up 2.59. Now, that's pretty substantial. It's closing in on the fear, okay? And traders are becoming very uncertain, and it often leads to more of a bearish condition for the market. So again, we have we have information, the yield prices dropping, VIX climbing higher. The NYSE trend is kind of quiet, but that pre-market indicator is also showing that there's some bearish tendencies still in the market around the open. So we might see lower move down at the open. Coming and looking at a little more detail, we see that the S&P is back below the 50-day moving average. Now it crossed up, came back down, and we might be looking for another move down near that 6780 area. Wow, excuse me. Woohoo. Wow, that's something, dust or something. Anyways, back on track. Looking at the Dow 30 stocks, volume is still somewhat on the lighter side. We are still seeing NVIDIA is back about normal, but NVIDIA had enormous amount of volume traded on it yesterday. Almost 300 or probably over 300 million shares traded. Now, NVIDIA is a $185 stock, okay? So this is leading me to believe that NVIDIA stock is very heavily influenced by AI type trading, okay, machine trading. Okay, the volume is just incredibly high to sustain that price. So we watch NVIDIA and we see in the pre-market whether it's trading on heavy volume, light volume, or normal, and we want to pay close attention. This, I think, will become eventually kind of a lead indicator. NVIDIA is one of the large market cap weighted stocks, and it does influence the S&P and the NASDAQ, as well as the Dow, okay? But the Dow is a price weighted index, which has a little bit different effect on things. As we look at the S&P futures, yesterday we closed the market way oversold relative to the cash market. This morning, we're looking at having 13 Dow stocks negative over 94 cents and only one positive. So that's 12 times 2, which gives us a cash value of 24. Futures are trading at negative 58. So again, S&P futures are oversold. relative to cash, meaning S&P futures are trading at a heavy discount relative to the cash market. Now, the cash market is also showing some light volumes on many of the other stocks, and that also invites some additional volatility into the market. Okay.
Order filled.
So, where do we? Okay. And let's bring over the NASDAQ. Now, all the indexes, at the time I was putting together our pre-market prep, the indexes were inside, the S&P was inside and showing an accumulation for the Asian and part of the London session, okay? And the Dow and the Russell were showing outside, okay? Now, I do want to bring that into effect here, showing it the NASDAQ. The last part of the New York session and Asian session were pretty tight range, kind of flat, and part of the London session as well, okay? So we like to use the Asian and London session, New York session to see what price did. And if we're looking at that consolidation, then the move down right now that we're showing would be the manipulation phase. Okay, this is part of the AMD type strategy, which is really just a roadmap. And the roadmap does alert you to different road conditions. Manipulation has specific entries and is often with momentum until we find some good solid demand, and then we have distribution, which would be, in this case, back to the upside. So just a little more clear picture on that from what we saw yesterday is that we saw the Asian session where it consolidated. Then we saw the manipulation to the upside on the NQ, and then we saw distribution. Okay. So the Asian London sessions are important to document to see what the price did, whether it expanded or contracted and where it's at. And then that'll help us anticipate what to do in the New York session. Okay. Very cool stuff. Much of that was developed from Richard Wyckoff and the way that he saw the market. Okay. The Wyckoff method of trading does include some point and figure charting, which is also quite the odds enhancer when you start looking at price and what it did, whether it reversed or changed directions and accumulated in certain areas. Okay. All right. Let's see. So right now we're kind of in limbo. We're not at a fair value gap, and I'm looking more closely for the fair value gaps because of where I anticipate the markets to be right now. Okay. So when we're looking at a manipulation phase of the market, that manipulation phase, 2026, we use different types of entries. This was a good play yesterday on crude oil, just to give you an idea of what that picture looks like. Accumulation, manipulation, and then distribution. Okay, so this was a very picture perfect AMD trade. Okay, the picture and what I'm trying to exploit a little bit more is when we look at that accumulation, and then we see the next move is the manipulation, distribution, and just the inverse for the upside. So when price breaks to the upside, it's not that a brand new uptrend is in play, it's that they're manipulating price to the upside to get traders to come in while they're selling to them, and then they have their distribution. Okay. So think of this, the accumulation is like you're coming down the basketball court and you got your opponent coming towards you. And then you're going to fake left and then go right, trying to get around your opponent. The accumulation phase is us approaching the opponent, which would be what the professionals or banks and institutions are doing. When they manipulate price up, we look for the bigger, longer term price move back down. Okay. When they manipulate to the downside, we look for that move back to the upside. Okay. Think of it as a roadmap. Think of it as a way to identify potential trade opportunities. Okay. Now, the manipulation phase and distribution phase also offer different types of trade entries. And one of those trade entries that I want to point out, and it worked well on crude oil as well, but when we talk about the leg base group of candles, when price manipulates to the downside or to the upside, okay, we know the manipulation phase is about to terminate when it lines up with one of our leg base zones. And this has happened in countless examples, okay? So until price manipulates to a leg base, okay, we're going to continue with the manipulation direction, okay? Now, once it hits the leg base, you have your first opportunity to take the long entry using your proximal and distal lines as your risk management. If you choose to wait a little bit for more confirmation, then the second entry will be on the pullback into a fair value gap. Okay. Now, let's bring this back up here. So on S&P, just to kind of give us a view of the roadmap, if we determine that the Asian session was accumulation, the London session, part of the London session, okay, is the manipulation here, then our first point of entry is going to look for the leg base over to the left side of the chart. Okay, so we take our horizontal line, scroll over to the left, and we start looking in that area. Let's put the little blue dots on there. For that leg base group candles. Okay. Now what we're seeing is on this time frame, it's not quite there. So we either need to turn the time frame up or turn the time frame down. Okay, but we also see that this area was also an accumulation. My speculation is that price will go below this accumulation as well, since it has not played out yet. And we'll be looking for the leg base group of candles right here about 68.13, 69 or 67.91 with a fair value gap in the middle of that around 68.03 for the turn completion of manipulation. Okay. Now that looks like a pretty substantial price move, and I would agree it does. Okay. But when you go back and look at hundreds of picture perfect trade setups, you see that it often aligns with the leg base group of candles when the manipulation phase is completed. Now, we are an outside day now on all the equity indexes. We're approaching the open. If price gaps outside of the prior session's range, gaps don't fill the same trading day. We often have that gap and run. So if we're looking at a gap and run scenario, if price opens outside the prior session's low, then we should be targeting that lower level. Okay. See, it's multiple different pieces of information aligning in the same general areas. Okay. So on a 5-minute chart, we're looking for that leg base. And what was the price? We had that, right around that 68.13. Okay. So until we get down to this level, or we're proven wrong, okay, we need to keep anticipating to take the trade short. And therefore we have to look for that trade entry where we can manage our risk. First one is coming up on the S&P. Okay, we have a potential entry around that 68.68. And with the stop loss, remember, we're using fair value gap entries during the manipulation phase. Okay. And fair value gap entries do incur a bigger stop loss. Therefore, utilizing position sizing for your trade idea, okay, is very much needed. Okay. So if my stop loss is going to be up here at the high of candle one with the fair value gap, looking at a trade entry around 68, 66, okay, I need to account for what size of position, how many contracts should I be trading at that point to stay within your trade plan parameters for risk. Okay. Now remember, we have to be patient and wait for the tradable entry so we can manage risk based on the roadmap, what kind of conditions we're in, what phase of the market we're in, and plan accordingly. NASDAQ, pretty much the same narrative. Okay, we got accumulation. We're now in the manipulation phase. Okay, so let's jump out to the smaller time frame. And let's determine where we have a potential fair value gap entry. That's fresh. Looks like that one might have been used, but remember, as you are trading, you must have a solid idea of what your risk is dollar-wise per trading idea. Okay. And then use only half of that to start the trade. We're already deep into the manipulation phase, and we're going to go over to the left and look for that leg base. Okay. And we need to come below this range. Woo, that's way down there. All right, so we have the leg base group of candles, and we have another fair value gap inside of that. Target the levels here. 24,576. Boy, that's going to be a pretty good move. Come on, charts, load up. There we go. We're already seeing that the data is being a little sticky as we get closer to the open. Now, the toughest part, let's use 549. So let's bring this up. Oh, look at that. Look at that. 549-ish right there. This is a 200 simple moving average. Okay. So on the daily chart, the 200 period moving average price often reflects off of that. So being the 200 period moving average, okay, the leg base, the conditions we're looking for. It's all lining up to have a solid demand around this level here. Okay. So we still have the potential of getting in and participating in the move down. Okay. By using a fair value gap type entry, whereas we can manage our risk and have where we're looking for the bottom to come in turn and go back up for distribution. 24,576, 24,446. Now this is setting the stage, understanding the map, the type of entry, the type of risk management, and where we anticipate based on prior price action. When price manipulates, it looks for the leg base. That will be the first entry to anticipate the change in trend. This is a forward-looking technique, and we're using the maps, the style of trading from Richard Wyckoff on a small intraday time frame, including using the Asian, London, and New York sessions. Okay. So there's a lot of little lessons to understand why I'm choosing these levels. Okay. Now, throughout all this process, please ask questions. If you're in a YouTube channel, ask questions, get to know us. Um, I'm pretty open to answering those questions. Okay. And we'll never make anybody look silly or funny, and just your curiosity about this and to understand where the resources are to uh, be part of this is very important. Okay. Okay. So Dow, let's bring up the Dow. Okay. We have an area down here that I've already got pre-marked with our prep screen zone. And that's right about that 48,600 range. Okay. And on the smaller time frame, it does show that the Asian and part of the London session was accumulation, small manipulation. Okay, so we may see some discrepancies between the equity indexes this morning, whereas potentially the Dow and the Russell have already come down, completed the manipulation, while the S&P and the Nasdaq may be catching up. Okay, so when we watch all the equity indexes at the open, we want to be prepared that they may be going different directions. Okay. So if we have two indexes going up and two indexes going down, we understand that the market conditions are going to be a little bit difficult. With additional information, the dollar flat while the 10 and the 2-year yield going down, trade conditions are going to be a little difficult. Prices on the equity indexes gapping outside the prior day's trading range might lead to a gap and run for the Nasdaq and the S&P, and we might see a little further move down on the Dow and the Russell. Okay, so with the Dow and the roadmap that I've shown, we're looking for that first point to align with a leg base group of candles. Okay, so we're going to go over to the left-hand side. And again, we have that basing, so we need to go much lower than that and keep looking to the left to find that leg base. I'm gonna have to go lower than that. Yeah, we're getting close. Okay, and we have a little level right here. This is a leg base. And notice that there's one right above it right here. Okay, that's that leg base group of candles that I'm referring to. Now, when I document that upper level, and let's just change the colors so we know which one we're looking at. The power of the leg base group of candles is that we often see price change direction in that area, and you can see how it dipped right in and took off to the upside. Okay, so that one has already been used. Okay, so we're not going to count on it. We want a fresh level. Okay, now as we come back and look at the level that we're looking at the moment, we need to build a little more of this picture. Okay, understanding where resistance is and understanding where the buy territory is at. Now, these are things that we teach in our course material. Okay, the location of that leg base is also a big factor in how and why I'm choosing that. And notice one other detail. We're looking lower in this range because price made a lower low before it took out the sellers at resistance. Okay, therefore the location needs to be in the bottom 2/3 of this buy territory. Now let's come back over to the right side of the chart. Okay, and that is where we have the leg base. Okay, now that doesn't mean price is going to go there. It doesn't mean we're going to have a successful trade either. Okay, we're making a plan. If price returns here, what would be my position? I might look for a long opportunity. If price returns down here, we're going, wow, that's a pretty big drop. We're already down 538 points. We're down 1%. Now that's a big, noticing the percentage drop on the equity indexes is of key importance. Why? Because around that 1.5 to 1.75% drop is where we start to see some type of a bounce. Okay. Next one on the S&P would be 1.75 to 2.225, where we start to see some big changes in direction. Okay. It's kind of how far can you stretch that rubber band down before you let it go? Okay. Before it snaps. Okay. And the percentages, watching the percentages is of key importance when we start watching how price gets stretched to these areas. Now we're 2 minutes away from the market open. Crude oil has had a massive move up. We're now up about 3% for the Globex range. Okay. Heating oil also probably due to the upper Northeast having some weather. Okay, some snow. There might be a huge demand on the heating oil. Heating oil and crude oil are very closely correlated, but also the Iran nuclear talks and all that fun stuff going on as well has had a big impact on crude oil. Natural gas has had a lot of news, but there's more supply coming in than the demand. Okay, so we noticed that natural gas had the accumulation and the manipulation. So now looking for the opportunity to say, okay, well, if it's accumulation and we made manipulation, we might be looking for distribution. Okay. So the trade opportunity may be to the downside once you get your trade entry. Okay. Gold, silver on some pre-market news had a big blast off, a big price move, and on the higher time frame, looks like we're going to continue that move to the upside as price continues to break out, making an ascending triangle. Okay. All right. So a lot of lead up, a lot of research that we're doing right now ahead of market open in 1 minute. So choose a product that you're going to look at today and watch how you look for the opportunity. Now, we understand that this phase right now that, and I've got the S&P on a 5-minute chart. Okay. So S&P on a 5-minute chart, we're in that manipulation phase. We know where the leg base is before we have the turn. And now we got to plan an entry. So what would our planned entry be? During the manipulation phase and the price has not hit the leg base, we would be looking for a fair value gap type entry, okay? Or a breakout trade when it breaks the lows, okay? Okay, I'm shutting down a couple of other things over here. Hopefully frees up some resources. Okay. So you can be patient and wait for price to come down to demand. We can also use Apple and NVIDIA over here as an additional odds enhancer. Okay, look at the bank index. That's one of the things we did stipulate or say watch for. The strong move lower on the 10 and the 2-year yields are concerning and may have a very bearish impact. Watch the banks closely. Okay, so the bank index over here showing a very big gap lower. Okay, and that is along with the 10 and the 2-year yield as you kind of get to better understanding of what's going on with that. Okay. As we look at Nvidia and Apple, we're going to look for them to start to move back up. And if we have that move back up, we will then look at maybe a short-term bounce. Okay. Now my charts are running a little slow, so I'm going to point out places where I'll place trades ahead of time. Okay. I just want to give you the heads up that my data may be a little bit lagging, so make sure you're watching your charts and not just use mine as a reference. But pay more attention to your charts when you're placing that trade. Okay. We're still gathering information. And the more that I keep looking at the banks, they continue to fall. I'm also going to go back and check and look at some liquidity, like the volume on the stocks. But this is a very sizable gap on the bank index. There we go. It's going to be a good trade. We're going to have some good trades. We just need the market to give us the right indication. Since we're still in the manipulation phase, I'm going to anticipate where I may have a good short entry right around that fair value gap. Okay, size your position based on your trading plan. And generally, I'm going to stick to, just a couple of micro contracts here. My stop loss initially will be roughly about that 68.78. I'm not getting bullish until price hits leg base based on the structure. Okay. So taking a trade short, looking for that 68.67 area, stop loss 68.77, 10 points. Okay. If I choose to chase the trade, I still need to leave my stop loss where it's at. Okay. So if we get some economic reports, which we do have coming out, we have what's coming out here at 9:45. We got Chicago PMI, not delayed, and then 2 construction spending economic reports coming out a little bit later. Okay. So I'm going to set a trade up for the breakout to the downside as I'm looking for 68.13. Okay. I will also look to participate in a trade going short right around that 68.67 with my stop loss up at 68.78. Okay. So let's set up the breakout trade first, 68.54, starting with 2 micros. Stop market. And then we're going to have a sell limit. Not that 68. Let's go 68.68 right there. Oh, I just went 2. And my stop loss, I'm going to come place that immediately. 68.68. Look at 68.78. Okay. So that trade is set up on the S&P. We'll come back and view it. And I want you guys to recognize the method and approach. Now, if I get into the short trade on the breakdown, okay, I do have elevated risk. I already have my protective stop loss in place, okay, in case some news comes out like, hey, we settled the Iran deal, negotiations are going well, okay. Well, that would cause the market to react differently. You must, when these things are on the table, you must have a protective stop loss, okay, must have. And those are some of the big buzz things going on. All right, let's jump over to the NQ. All right, NQ has come into that. Let's see, I'm going to go ahead and execute on that. Starting off with just a small position, I'll take 1 micro.
Order filled.
And I need to place my stop loss. Oh, come on, charts. There we go. 24,922.
Order filled.
Not a good sign when your charts freeze up. Hold on 1 second. Need to get that stop loss in place. 24,922. Okay. Bring my screen back up. Okay. So I have about $65 risk on the trade. I'm just took 1 micro. What we're trying to do is educate here, not to see, oh, wow, look how much money to make. Okay. The money being made is only important to the person making the trade. Okay. So make sure your stop loss is in place. Okay. S&P, we already got in the trade, I believe. Okay. Looks like it dipped down, got the lower one first. Let's make sure I have my stop loss. Oh, that's my, I'll add on to the position at that point. Come on, charts. And I just need to make sure that I have 2 contracts up here. Yeah, we got what, 2, 2, 4, so buy stop, make it 4 contracts. Remember, my stop loss is wider because of the conditions of where we are on the roadmap. Okay. We're still anticipating that this roadmap is where we're at is that manipulation phase. That's why we looked for the fair value gap entry, breakout entry, and our targeted ranges down below. NASDAQ. Okay, still maintain our stop loss. Got a little heartburn on that. Notice the tick Q. Okay. Now, for those that attended the pre-market routine course last night, is all this sounding pretty familiar? Where to look, where to train your eyes, okay? What to anticipate, okay? All these things that are outside the price chart directly impact how price is moving, okay? So it's kind of like driving your vehicle. The information outside your vehicle is just as important as you driving your vehicle, okay? All right, so NASDAQ and S&P are underway, and we know what we're looking for. We have a profit target and the 200-day moving average. We have enough wiggle room. We properly sized our position not to take more risk than our trading plan requires, okay? Or our trading plan demands, okay? And so far, things are going in our favor based off of understanding the conditions, the type of entry, okay, and where price potentially needs to go in order to complete the structure, okay? And we have proper risk management in there. Let's jump out and take a look at the Dow. Now, the Dow is also moving lower. Nice entry. Your stop loss would have been about 49,133. But I couldn't trade everything, okay? We're looking at a target. The leg base on the Dow is right about the 48,640. Dow is down almost 1.5%. By the time it arrives here, it may be closer to 2%. Big heads up. Russell. Okay, Russell tested once early, and now it looks like it's breaking through that area. Russell. We didn't get a chance to fully set up. We do have the 50 moving average that it's approaching. Price may defend that, but it looks like it's defended it once, twice, 3, 4, 5, 6, 7 times. It might be looking for a break lower, okay? So as we kind of summarize, and due to my data being a little bit more lagging, okay, I'm not able to get into everything. Okay. How many of you have gotten into any of these trades this morning? Basically the NASDAQ and the S&P. So we only got one micro on the NASDAQ. Okay. Not a lot of risk, but a good price movement. A lot of volatility around here. An economic report coming out in 1 minute. Okay, our S&P, we have 2 micros. Okay. Be prepared. So in just a few seconds, we'll have that next report come out. That report would be the Chicago PMI. Okay, and then after that, we have construction spending coming in. Beautiful sunrise out there. Sky is kind of a salmon color. Beautiful. I'm trying to size my chart up here on Apple. Get a better picture of Apple in the video, what they're doing. Now, anytime you can take a profit throughout this process, okay? Just because I anticipate price to come down here doesn't mean it will or can't. Does not guarantee a successful trade with a profit, okay? So trust your own feel good, okay? And what I mean by that is if you feel that the profit is good for your trading day, lock it in, okay? But continue to watch how things play out so you get a better understanding of the accumulation, manipulation, and then what we're looking for is possible the distribution area, okay? Doesn't look like that report had much of an impact on the market right away. S&P is down almost well, it's low, it's down 1%, down 60 points on the S&P. The Goldman Sachs down 45 buckaroos on light volume. Interesting. All right, so we have 17 Dow stocks negative over 94 cents, and we have 1, 2, 3, 4, 5, 6, 7, 8, 9 positive. Now these was 8 times 2 would be 16. Cash equals negative 16. Futures are trading at negative 62. Futures are oversold relative to cash. Okay. See, all these things, like just like going into a crosswalk or an intersection here. Okay, you're watching and monitoring many different things on the price chart. You're looking left and right. You're trying to get a good understanding of the conditions. We understood with the lighter volume around the open and the economic reports that the whipsaw price action, and we needed to have a stop loss in the right place so that we could withstand without getting all scared about the volatility. Okay. Volatility around the open is more expressive when we have light volume and the stocks are either down or up, or things are oversold or overbought. Okay. Having the conditions as we're looking at that manipulation phase, understanding how to execute on that particular trade and where to place your stop loss. Okay. Just to keep you just outside of the range of getting caught in the whipsaw and not being able to stay with it, right? Okay. All right. Let's see. How did the Dow do? Let's bring that up. Okay. Dow is approaching a level. So forward looking, I'm going to target that area. I want to set an alert
Order filled.
on that. Did we add on or get stopped out? Oh, hold on 1 second. Alert. NASDAQ. I got stopped out on the NASDAQ. And that was $67 lost. Okay. The next trade entry would be on the short side, still looking for that manipulation phase. Okay. 24,958. And then we'll have a protective stop loss just above that. I'm still here, just trying to free up the charts a little bit. I did that restart and everything, so it free things up. All right, let's get back to sharing. Okay. So my next entry, if I have a short on the NQ, 24,958. And the stop loss will be just at the 988. Notice the big whipsaw, so there's not much I can do with that at the moment. Then we'll come back over to the Dow. The Dow, we did set up a price alert on one of our lines to let us know when the Dow arrived at that demand zone. Okay, so we have that in play. We're looking at 48,640. Notice the percentage drop on the Dow. Now there may be a couple of good little bounces in here, okay? But this is where I'm anticipating the end of the manipulation on the Dow. So I want to get my position ready. Now, if I'm afraid to take the Dow right away or as it is approaching, I can wait for, it'll take about 20 minutes because we're looking at a 5-minute chart. In order to create, once price arrives, it'll take about 20 minutes to create a fair value gap back to the upside. Any questions, comments, things like that? Go ahead and type them in the chat. Futures are very oversold relative to the cash market. Dow is almost down, well, now down 800 points. Okay. Come on down. I think we're still in the S&P, is that correct? Yep, it's kind of flat, isn't it? Russell? Russell is testing the 50-day moving average, dropping down to the 5-minute chart. Let's keep an eye on that 2614, 2615 area. And we've got about 7 minutes that we're waiting for that arrival. Now, on the way back up, look for the fair value gap. That'll become a profit target if we get our long entry. Let's come do the same thing on the Dow. Profit target about 48,848. If we get that, that's almost a 200-point bounce. You're going, hey, I was taught never to catch that falling knife. Okay. We need the picture to play out. Okay. And this is the picture that we're looking at, is kind of using chart patterns as that roadmap. We had accumulation. Now looking at the manipulation. Price coming down to the leg base. And then we'll look for that distribution back to the upside. The AMD strategy is pretty simple, but it can be a little challenging to define your own range, okay? The time frame that you would like to find it on and so on, okay? Have very specific rules for how you assess accumulation, sideways going market, and how you assess, what happens after, okay? Some of the more challenging sideways accumulations when I have 3 tests of support on the left, 3 tests of support resistance on the right. Okay, and I usually look for 3 points where price bounced off support or bounced off the resistance to isolate that area for what we would anticipate is accumulation. Okay. Now we do have another economic report coming out in about 4 minutes, which is construction spending. Is it construction spending or housing? Construction spending. The first one comes out already, was a delayed report. And the actual report for last month would be at 10 a.m. Maybe we'll get that little exhausting drop right there. So I'm going to place my order out there ahead of time, 48,640. I'm gonna come in. Yeah, let's come in right at 640. I may have to wait for the turn if it doesn't get me exactly. My stop loss will be about 48,600. So let's put that on there just in case. S&P still hovering. NQ not there yet. The Dow's closest one. Russell also approaching. Russell below the 50 moving average. We'll see if it's going to defend it at all. Two minutes for the economic report. Now, if it does a quick drop into that area, like an exhaustion move, do not chase it going back up or hit market orders when it goes up. Have a limit order out there for your intended entry and a protective stop loss. Okay. Price still needs to come down here before we start looking for the reversal or the accumulation, sorry, the distribution for price to go back up. Okay. Right now, if we look at the Dow 30 stocks, we have what, about 6 down, oh, sorry, 6 up and 18 down, 19 down, so that's 13. So 13 times 20 would be what? 260. So we're about 600 points oversold. That's Dow futures oversold relative to the cash market. When markets are oversold, we look for that demand zone. You can see the rubber band is being stretched and stretched and stretched, and we're looking for that area to catch that move back up. Okay. We know what that picture looks like on the price chart, and we're using our roadmap. There we go. As part of that construction. Accumulation, manipulation, look for the leg base zone. This becomes a very solid forward-looking technique. Okay. Now, the pictures are one thing. How you enter the trade and manage your risk is a very different thing. Okay. Make sure you have clear entry rules, risk management rules anytime that you take a trade. These are just roadmaps. Okay. How do we anticipate that turn? Well, we look for after the accumulation with the manipulation, it either price travels up or travels down to find the leg base group of candles. It doesn't look like we had much of an impact on the, we're down 1.5%. Okay, there's some profit taking coming in. Now, if you're good at scalping or catching some of that momentum and taking profits quickly, then, you know, that was a nice little bounce, but it really never gave you any rules to engage. That takes time to understand the bounces and the reactions and stuff. And it takes some experience. Okay. Don't try to do that if you're brand new to trading. If price is going to start to travel back up, then it's going to create a fair value gap. Why? The stocks need to catch up. Okay. Until the stocks start to turn, okay, and the stocks move a lot slower, that's what's going to impact the futures. Stocks move first, futures move second. That's why futures are called a derivative instrument. They derive their price from the underlying, which is the stocks.
Order filled.
Oh, looks like I got my second set of S&P. My stop loss is in place. Yep, we just added on. Look at a lot of whipsaw there. If we didn't have a plan, the whipsaw would be getting us all over the place. Okay. Crude oil, natural gas, gold. Aussie dollar back up in the zone. Crude oil now looking to go back up on a 60-minute chart. Oh, look at that. Little late base zone. I'm gonna jump into this one, catch a little move. We're looking at 2 micro contracts.
Order filled.
Stop loss, gonna come in at 66.74. $36 risk on a couple of micros. If you look at from low to high, that's a 23% retracement as well. Often Fibonacci retracement of 23.6 is the a momentum type trade. The momentum is continuing. All right, what else do we have here? Look at Dow on a 60-minute chart has reached a high time frame zone, a zone that can be used twice, once off the proximal line, once going deeper in the zone. Okay, so we're in the right place with the Dow. We're just looking for a very precision entry on a smaller time frame. With the 10 and the 2-year yield dropping, we're seeing that the 30, the 10, and the 5-year bonds and notes are pushing higher. And let's see, we got Russell. Russell took out one of those zones. Let's get that off the table. Okay, now notice NVIDIA is getting a little bounced up, but Apple's going down. Okay, so gonna have to sit through some of that volatility. The bank index still has not made a higher low and still looks pretty weak. If it starts to break lower, you might see that price movement down a little bit. In Q. Now this is a tough part for me as a trader is, you can still see that there's a lot of tails that are overlapping the candles, and it's not giving us a very clear picture for a solid entry. Okay. And this is one of the biggest things that hurts my account is I try to anticipate it and the FOMO has come in. Okay. Trading alone can often invite those FOMOs to come in and get you on the wrong side of a trade pretty quickly. Okay, looks like the Dow. Now, I don't want to take the Dow short. I want to capture it going long, but this would be that first opportunity in the manipulation phase to continue looking to go short. The other reason is my stop loss would be at 49,016. It's a little bigger than I want to risk. Okay. So based on my trading plan, okay, I can justify waiting at the 3 candle pattern. And based on the trading plan, I know where to put my stop loss. Then I evaluate that and say, wow, that's a little more risk than I want to tolerate. Great. Don't take the trade. Wait for your entry. Yeah, but it's moving up. I get it. I really get it. Okay, took out that one. We got the next one. And we're still waiting for a fair value gap to be created to the upside. Stocks really haven't made much of a turn yet.
Order filled.
Oh, did S&P get us? It did. Now, the equity indexes are still quite messy. And we do have now a fair value gap. But it didn't go down to the leg base. Okay. So if you're thinking about going long, we have an entry 68.63, and your stop loss would be below. Going short, entry at 68.84, stop loss 68.93. And crude oil is looking pretty good. A target range for crude oil. Click once on the A point, the B, and then the C point, and we'll be looking at target 1 about 68.25. Target 2, 69.75. And of course, managing our risk, keeping your stop loss in place. Now, on this particular trade, taking 2 micros, I've got roughly about $36 risk on the trade. That's if it breaks this support. Okay. Let's take a short-term trade on. I'm still going to be looking to the downside on this. Might be an opportunity to take it back down to that level, manage the risk. If we enter at 48,934, stop loss 48,007. Okay. Watch the time of day. Any questions from the chat?
Order filled.
In order for price to go long, it would still have to come back down to 878 for that fair value gap entry. This is in the context of a downtrend, taking a trade short in that fair value gap. There's always some unfilled orders. What we need to see is if there's enough unfilled orders to change or keep the price moving lower to our targeted area. These levels can be good for a 1-to-1 move, 2-to-1, okay, and sometimes even bigger than that. Remember, you can take profit anytime off these levels if you're not confident that the trade is going to work in your favor or you have some additional information, okay? Something outside the price chart that's saying, hey, this is not right. There might be news, an economic event, or some of those things coming into play as well. Sometimes it's good to have the time on here for time remaining in the bar. So you know when that fair value gap is completed. We can keep adjusting until it does. Now, once this candle completes, the fair value gap is set. When the price comes back to 854 again, I may have my finger on the button. If it starts to move higher, I'll jump out. Because this is what it looks like when I should be going long, as far as using a fair value gap. And right now we're kind of in between. We got a kind of a small range. So I'm gonna keep moving my stop loss. $69.
Order filled.
Darn rookie. Sometimes when the data is sticking. So I ended up taking a profit. Don't want to make it sound bad, but I didn't want to get out. I just messed up on my order entry. So if we choose to go long, we know that price has not hit the leg base to complete the structure. Your stop loss would be at the low of candle number 1. Okay. Yeah, it looks like price is going to take that out. So we did recover, I think. Let's see, Ben. Yeah, I think we recovered one of our losses. So on the S&P, we have potential for a long. 68.63 if you think the market's going to go back up. Stop loss 68.51 using a fair value gap entry. Utilizing things outside the price chart, we see that the cumulative tick is on the bearish side, where we've had more selling than buying, or more downticks and upticks. And we also see that Apple and Nvidia are still pointing lower. Okay, so as Apple and Nvidia keep moving lower without making a higher low and a higher high, okay, market conditions are still bearish. The cumulative tick for the NYSE is also getting more downticks and upticks. Okay, bearish as well. So choosing to take an entry, since price has not intersected with the leg base for the manipulation phase, you may just be looking at a bounce, but not a trend change. Okay. So I'm not jumping into the long. I'm actually still waiting for that down a little bit lower, take a nice position. For the Dow, we have taken out. So this one goes out of the way. And we continue to wait for that long entry in the leg base, down a little bit lower. Russell. Yep, still waiting on the Russell as well. Now you can get some big price moves, but not an entry. Okay. So I don't want you just to chase and say, hit the button, hit the button. Okay. That's not what we do. We look for a very specific trade setup so that we can always manage risk. The crude oil just meandering around. Natural gas back up into the fair value gap. So we could look to take a short on natural gas. After the manipulation comes distribution. Short.
Order filled.
Stop loss 882. A lot of whipsaw. So how's everybody doing in the trading this morning? You guys hanging tight, keeping your risks small? Talk to me a little bit. Is our live stream going, team? I'm looking at the live stream now and it looks like it's still right at the beginning of the session. It's like it's stuck. It's all good, okay. Thank you. That was a nice little turn. A good example of a fair value gap working and getting that picture. If you don't understand what the fair value gap is, go out and search it. Look for FVG or fair value gap. There's a lot of little tutorials out there so you can get the basic idea, but you're going to get more of the idea how to use it once you start watching it work. Okay. Yeah, CL, it's kind of got a nice little setup, but it's still not, and we're looking at target one at 68. Guess they're trying to get enough people that think the market's going to go down, get the shorts to cover here soon. Net gas also chopping sideways. Gold. Nice job, Miss Fay. You were just dialing that nat gas and crude oil down. Oh, just a heads up, Miss Chris was in the pre-market routine course last night, and she's getting close. I think they'll be moving in March, and then she'll be back in the saddle. So you guys will have a lot to catch up on. Yeah, I tried to show her just a sneak peek of the AMD, and I think it piqued her interest. Markets have quieted down quite a bit. Now, one of the things that we could take away from this session here is that when we took the approach of understanding where we are on with the AMD type strategy, we had planned entries, we had good risk management. Our planned trade entries and risk management did not exceed our trade plan, so we still have good, we still have opportunities for today. Okay, it's not like we're washed out or blew up our account or something like that. We've got a nice approach. Okay. Now, as the market conditions are slowing and getting a little choppier, we're still waiting for some of our entries. My hope is that when you all are using and watching what we're doing, you're seeing that we have a very strong method and approach to the market. We have specific entries and good trade management. Okay. And sometimes we just get into that mode where we have to wait a little bit longer for the trades to come into the zone. Okay. But there's really nothing going on right now as prices just chopping sideways. It's like they're waiting for some news or an economic report or something to come out. Okay. We will also be looking at the end of the where the banks and institutions complete their order flow between 8 a.m. and 11 a.m. Eastern. So we're just about approaching the bottom of the hour. We'll have that last little half hour where the banks and institutions complete their order flow. And then we're in the last hour of the London session, and we'll see if the last hour of the London session completes. the move lower so we can get into a nice demand zone on some that we've already identified. Okay. Understanding the different sessions and when the sessions overlap, understand when one session is closing and the next one is getting ready to open or be on its own. Like the New York session is open, but it's over the London is still overlapping some of the New York. Okay. So as one session comes to an end and another session starts, or is on its own, we do see some of that volatility, and there can be some opportunities at that point. So let's see what all the indexes are doing together. Be careful not to get drawn in. Notice that here on the 5-minute chart on the NQ that almost all the tails are wiping out a fair value gap. Doesn't mean you're missing anything. It just means that the market conditions are pretty choppy, going back and forth. This may incur way too much risk for your trades. Okay. When you have good trades, you have nice, clear, and clean setups, so you're not stressing or chasing or worrying about the trade. So if you get into a trade and you start stressing or you're holding your breath to hope it goes one way or the other, okay, you probably took a little too much risk and you probably took that trade based on your FOMO. Okay. Learn to read those conditions among yourself. Okay. Look at yourself. Say, okay, well, how do I feel? What am I looking at? Why am I not getting, the results I'm looking for? Did I take a trade outside of my trade plan? Be honest with yourself. Okay. There have been many times I just hit the button because I was bored and I just wanted to, feel something for a minute. Okay. Those are not necessarily profitable trades. Okay. When we see the long tails and the whipsaw back and forth, okay, that's not a direction. Okay. So to summarize and kind of wrap up our session for today, I'm still waiting for the Dow. I think the Dow is going to give us a pullback down into that 48,640. It might be closer to the London close. Okay. And then we'll look for price to move back up after London sells off. So I'm watching that area. Along with the Russell, still looking for that London close and see if that has any timing. 11 o'clock or 12 o'clock Eastern. 11 o'clock is the end of the banks and institutions. 12 o'clock is the London close. So we might be about 30 minutes to an hour away before we get price back down to a demand zone. Okay. NASDAQ. NASDAQ is just still choppy and kind of all over the place. I don't have a clear direction on that. I do understand where we are in the map, but I don't have a clear entry to engage. Okay. S&P, also looking for that lower level. We had a nice little long opportunity. We got another short opportunity about 884. Okay. We're kind of in between zones now. The market conditions. Look how slow the price is moving now. Okay. The team just posted a note. If you signed up for the pre-market routine course, you should have received an email for the link to attend session 2 this evening. So check your emails. If you have not, then reach out to admin@themarketinstitution.com. So I'm going to head over to our Discord room now and hang out in the voice channel, do some things in the background while we're waiting for trades. So if you'd like to join me over in the Discord channel where we all can do some trading, I'll be over there and look forward to seeing you there. Okay? So everybody have a wonderful rest of the day, a good weekend, and we'll see you over in the active income channel in our Discord room, and we'll continue to trade. Okay? Have a great day, everybody. Wait for the good trades. Wait for that leg base. Okay? It'll be a good, solid trade. You won't have to worry about it. Okay? I'll see you guys on Monday.